There is a building in Florence, Italy that changed the entire world. Not a cathedral, not a palace, not a military fortress. A bank. Built in 1397, run by a family so powerful that they controlled kings, funded wars, and shaped the destiny of civilizations. And here's the thing that should make your blood run cold. The exact pattern they created is repeating right now. In 2026, in your economy, in your financial system, in your life. You just don't see it yet. The Medici family didn't start as billionaires. They started as wool merchants. Ordinary people in an ordinary city doing ordinary business. But they stumbled upon something extraordinary. A system, a pattern, a way of creating wealth so elegant, so powerful, so mathematically inevitable that once you understand it, you can never look at money the same way again. And they weaponized it. Let me take you back to the beginning. Florence, 1397. Giovanni de Medici opens a small banking house near the Ponte Vecchio. Nothing special at first. He handles deposits, facilitates trades, converts currencies between merchants crossing borders. But Giovanni sees something nobody else sees. The wool trade between England and Florence doesn't just move cloth, it moves money, massive amounts of money. And that money needs to be tracked, secured, transferred, and multiplied across vast distances without modern communication or transportation. The system that facilitates this? It's called the lettere di cambio, letters of credit, financial instruments so sophisticated that they essentially allow you to move wealth across continents without physically moving a single coin. Giovanni doesn't just participate in this system, he masters it. Then he starts to control it. Within 20 years, the Medici Bank becomes the most powerful financial institution in Europe, not because they have the most gold, not because they have the biggest army, because they understand something fundamental about how money actually works. And here's the part that connects to today. The exact mechanism Giovanni used to build his empire is the same mechanism that Silicon Valley uses to create billion-dollar companies overnight, the same mechanism that central banks use to create money from nothing, the same mechanism that cryptocurrency was designed to disrupt. But here's what nobody tells you. The Medici pattern has a dark side, a catastrophic failure mode built into its very structure. And when it fails, it doesn't just destroy the bank, it destroys entire economies. I'm going to show you exactly how the Medici built their empire, then I'm going to show you exactly how it collapsed, and then I'm going to show you where that exact same pattern exists right now in 2026. Because the Medici Bank didn't just fail, it predicted every financial crisis that has happened since, including the one that's coming. Part 2. The secret weapon of the Medici wasn't gold. It was trust. Let me explain what that actually means in practice. Florence is the financial capital of Europe. Merchants from England, France, Spain, the Ottoman Empire, all of them need to move money through Florence. But here's the problem. Moving physical gold across medieval Europe is dangerous, slow, expensive. Bandits on every road, pirates on every sea route. So Giovanni created something revolutionary. A system where money doesn't need to physically move at all. Here's how it worked. An English wool merchant wants to pay a Flemish cloth buyer. He walks into the Medici Bank in London, deposits his gold. Giovanni's bank gives him a letter. Just paper, nothing more. The English merchant travels to Florence, hands the letter to Giovanni's bank there. Giovanni's bank pays the Flemish buyer in Florence. The gold never moved. Only the paper moved. Only trust moved. This is called correspondent banking, and it was the most revolutionary financial innovation since the invention of coins themselves. But Giovanni took it further, much further. He didn't just facilitate transfers, he started lending against those letters, creating new money that didn't exist before. If you deposited 1,000 florins, Giovanni could lend out 800 of them while still telling you that you had 1,000 in your account. Sound familiar? This is fractional reserve banking, the exact same system that every modern bank in the world operates on right now. Your bank doesn't keep your money in a vault. It lends 90% of it out, creates money from thin air, and hopes you never come to withdraw it all at once. Giovanni invented this 625 years ago, and we're still using his blueprint. But here's where it gets truly powerful and truly dangerous. By 1420, the Medici Bank had branches in 8 cities: London, Paris, Venice, Rome, Brussels, Geneva, Bruges, and Constantinople. 8 cities connected by a web of trust, letters, and fractional lending. Every transaction between these cities flowed through Medici hands. Every trade, every loan, every currency conversion. The Medici didn't just participate in European finance, they became the nervous system of it. And when you're the nervous system, you have incredible power, because you see everything, every flow of wealth, every debt, every vulnerability, every opportunity. Cosimo de Medici, Giovanni's grandson, understood this instinctively. He didn't use the bank just to make money, he used it to make kings. The Duke of Milan needs to fund a war. He can't raise taxes fast enough. He can't sell enough bonds to foreign investors because nobody trusts him. So he goes to Cosimo. Cosimo lends him 50,000 florins, enormous sum, enough to field an army for a year. But the terms aren't just about interest rates. The terms include political obligations, trade agreements, alliance commitments, military positioning. The Duke gets his army, Cosimo gets influence over one of the most powerful states in Italy, and the Medici Bank records another profitable loan. This is what power actually looks like. Not armies, not crowns, financial infrastructure, the ability to fund or starve any government at will. And by 1450, Cosimo had done this with almost every major power in Europe: the Pope, the French king, the English crown, the Holy Roman Emperor. All of them owed money to the Medici Bank. All of them needed Medici cooperation to fund their next war, their next project, their next ambition. The Medici didn't conquer Europe. They bought it, one loan at a time. But here's the critical question that nobody asks about the Medici. How did they maintain this system? What kept merchants trusting their letters? What kept kings repaying their loans? The answer is something dark, something that required constant vigilance and ruthless enforcement. And understanding it reveals exactly how modern financial systems maintain their power. In 1455, a merchant named Benedetto tried to cheat the Medici Bank. Not dramatically, not obviously. He simply inflated the value of a wool shipment on his letter of credit, claimed 500 lengths of cloth when he actually had 350, a 40% overstatement. Clever on paper. Within 72 hours, Benedetto was ruined. Not by violence, not by legal action, by something far more devastating: reputation destruction. The Medici sent letters to every banking house, every merchant guild, every trade partner Benedetto had ever worked with, detailed, specific, documented. Within a week, nobody would do business with him. His credit lines evaporated, his trade routes closed, his partnerships dissolved. He didn't go to prison, he became financially invisible, which in medieval Florence was worse. This is what economists call reputation enforcement, and it's the invisible mechanism that holds every financial system together, from 1455 to today. Because here's the fundamental problem with trust-based financial systems. Trust is fragile. If people stop trusting that their money is safe, that their contracts will be honored, that cheaters will be punished, the entire system collapses instantly. So the Medici built an enforcement network, invisible, comprehensive, devastating to those who crossed it. They became the keepers of financial reputation across all of Europe. And this is where the pattern gets really interesting, because the Medici reputation system is essentially the same system that credit agencies, regulatory bodies, and central banks operate today. When a bank fails to meet capital requirements, the Federal Reserve doesn't send soldiers, it sends a reputation signal: downgrade, warning, public disclosure. Other banks stop lending to the troubled bank, markets sell off their bonds, customers withdraw deposits. The mechanism is identical to what the Medici did to Benedetto, just scaled up by 600 years of technology. But reputation enforcement has a fatal flaw, a vulnerability that the Medici discovered the hard way, and that modern financial systems are about to discover again. The Pazzi conspiracy. This is the moment everything changed for the Medici. The Pazzi family, rival bankers in Florence, orchestrated an assassination attempt against Lorenzo and Giuliano de Medici during a church service. Giuliano was killed. Lorenzo survived with wounds. But here's what made this more than just a murder plot. The Pazzi had support from Pope Sixtus IV, from the King of Naples, from the Archbishop of Florence. The conspiracy wasn't random violence, it was a coordinated attack by multiple powerful institutions against the Medici's dominance. Why? Because the Medici had become too powerful, too central, too controlling. The people they had funded, the kings they had bankrolled, the popes they had financed, all of them realized something dangerous. They had made the Medici indispensable. And indispensable means vulnerable to resentment. Lorenzo survived, and his response was ruthless. He purged the Pazzi, destroyed their banking operations, executed conspirators, rewrote Florentine law to prevent future challenges. He consolidated power so completely that Florence became essentially a one-family dictatorship. But here's the dark irony that history books miss. The Pazzi conspiracy didn't weaken the Medici Bank. It exposed a structural problem in the entire Florentine financial system. The system had become too centralized, too dependent on one family, too fragile. And that fragility was about to be tested in the most devastating way possible. Because while Lorenzo was consolidating power in Florence, something was happening in the broader European economy that would eventually destroy everything the Medici had built. A pattern that repeats in every financial system that grows too fast, too interconnected, too leveraged. The pattern started with a single event that seems minor until you understand its implications. A single ship merchant sinks off the coast of Alexandria. Nobody remembers this ship. History doesn't record its name. The captain's name is lost. The cargo manifest is gone. But what that ship carried and what its loss triggered set in motion the greatest financial collapse in medieval history. The ship was carrying 200 letters of credit, financial instruments worth tens of thousands of florins. Each letter represented a debt obligation between merchants across Europe. Each letter was part of a chain connected to other letters, other debts, other obligations. When the ship sank, those letters were gone, permanently. And the merchants who were expecting payments based on those letters had nothing. No proof, no documentation, no way to collect. But here's the critical detail that makes this more than just a shipping disaster. Those letters weren't just individual transactions, they were nodes in a network, a web of interconnected financial obligations that the Medici Bank sat at the center of. Think of it like a spider web. Each thread connects to multiple other threads. Pull one thread hard enough and the entire web vibrates. Cut enough threads and the web collapses. The sunken letters cut threads. Merchants couldn't pay their obligations, which meant their trading partners couldn't pay theirs, which meant banks that had lent against those obligations suddenly had bad loans. And the Medici Bank? They were the spider at the center. Lorenzo tried to contain the damage. The Medici Bank started guaranteeing some of the lost letters, taking the losses themselves to maintain confidence in the system, spending florins they couldn't afford to spend. This is called lender of last resort behavior, when a central financial institution absorbs losses to prevent system-wide panic. Sound familiar? This is exactly what the Federal Reserve did in 2008, what the European Central Bank did during the European debt crisis, what every central bank does when the financial system threatens to collapse. But here's the problem with being the lender of last resort. It's expensive, devastatingly expensive, and it only works if you have unlimited resources. The Medici didn't have unlimited resources. They had finite florins, and every guarantee they made, every loss they absorbed, weakened their balance sheet a little more. By 1490, the Medici Bank was hemorrhaging money. Not from bad management, not from incompetence, from doing exactly what a responsible central financial institution is supposed to do, absorbing shocks to protect the broader system. Lorenzo de Medici died in 1992, exhausted,
financially depleted, having spent his family's fortune trying to keep the European financial system from collapsing. And within 3 years of his death, the Medici Bank closed its doors forever. The greatest financial institution in European history. Gone. Not conquered by an enemy, not destroyed by scandal, destroyed by the very system it created, by the interconnected web of obligations it had built over a century. This is the pattern. The central financial institution that becomes indispensable becomes vulnerable. The more it's needed, the more damage it absorbs when things go wrong. Eventually, the damage exceeds its capacity, and it fails. Now here's where I need you to pay very close attention, because this exact pattern, the rise of a central financial institution, its growing indispensability, its absorption of system shocks, and its eventual collapse, has repeated in history more times than you can count. The Bank of England, 1694 to 1797, the First Bank of America, 1791 to 1836, the Federal Reserve Bank of New York during the 1929 crash, the European Central Bank during the 2010s debt crisis. Every single time, the same pattern: rise, dominance, indispensability, shock absorption, collapse. And right now, in 2026, there is an institution following this exact trajectory, an institution so central to the global financial system that its failure would make the Medici Bank collapse look like a rounding error. And the cracks are already visible.
The Federal Reserve Bank of New York holds $6 trillion in gold in its underground vault, more gold than Fort Knox, more gold than any single institution on Earth. And it's cracking. Not physically, structurally, systemically. The cracks are invisible to most people, but if you know what to look for, if you understand the Medici pattern, they're everywhere. Let me show you exactly what's happening. First, understand what the Federal Reserve actually is. It's not a government agency. It's a private institution created in 1913 by bankers to serve bankers. Its primary function? Be the lender of last resort, absorb shocks, prevent system collapse, maintain confidence. Sound familiar? Giovanni de Medici, 1397, same function, same structure, same vulnerability. The Fed has been doing this for 113 years, and like the Medici, it has become completely indispensable to the global financial system. Every major bank depends on it. Every government relies on it. Every pension fund, every insurance company, every retirement account in America exists within a system the Fed maintains. But indispensability means vulnerability. The Medici taught us this 500 years ago. Here's where the cracks are showing. The global financial system nearly collapsed. The Fed absorbed the shock, bought $3 trillion in bad assets from failing banks, essentially printed money to prevent the system from imploding. They became the lender of last resort at a scale never seen before. But here's what the Medici pattern tells us about what happened next. When you absorb a massive shock, you weaken yourself. The Medici absorbed the shipping disaster losses and slowly depleted their reserves. The Fed absorbed the 2008 crisis and inflated their balance sheet to $9 trillion. $9 trillion. That's the Fed's version of the Medici spending Florence they couldn't afford. COVID hits, another massive shock. The Fed absorbs it again, prints another $6 trillion. Interest rates go to zero, stock markets are artificially inflated, real estate prices skyrocket because cheap money flows everywhere. The Fed saved the system, again, but at what cost? Now the balance sheet is $9 trillion. The national debt is $36 trillion. Interest payments consume $1.4 trillion annually. The system is so leveraged, so interconnected, so dependent on Fed intervention that any disruption threatens everything. This is exactly where Lorenzo de Medici was in 1490. Financially depleted, systemically trapped, unable to stop absorbing shocks without destroying the system, unable to keep absorbing shocks without destroying himself. But here's where the modern pattern diverges from the Medici in one critical way. And this divergence is what makes the coming collapse potentially catastrophic. The Medici Bank operated in a relatively contained European economy. When it failed, the damage was regional, devastating but survivable. Florence recovered, Europe recovered. The Federal Reserve operates in a fully globalized financial system. Every bank, every country, every pension fund, every cryptocurrency market, every real estate market on Earth is connected. Pull one thread and the entire web vibrates simultaneously. There's no containment anymore, no geographic boundaries, no geographic isolation, and the threads are already vibrating. BRICS nations are actively building financial systems outside the dollar, not gradually, aggressively. Saudi Arabia pricing oil in yuan, Russia settling trade in rubles and gold, China developing alternative payment rails, India creating its own digital payment infrastructure that bypasses SWIFT entirely. These aren't random events, they're deliberate attempts to reduce dependence on the Fed-controlled financial system, because these nations understand something crucial. If the Fed fails and they're connected to it, they fail too. They're doing what smart merchants did after the Medici Bank collapsed. They're diversifying away from the central institution before it breaks. But here's the terrifying part. The Fed can't let this happen, because if enough nations exit the dollar system, the Fed loses its ability to function as lender of last resort. The dollar loses reserve status, and the entire house of cards collapses. So what does the Fed do? It fights back, aggressively. Sanctions against Russia, financial isolation of Iran, SWIFT restrictions on countries that try to exit the dollar system, CBDCs designed to maintain dollar dominance in digital currency space. These aren't just policy decisions, they're survival mechanisms. The Fed is doing exactly what Lorenzo did after the Pozzi conspiracy, consolidating power, eliminating alternatives, making the system more dependent on itself. But Lorenzo's consolidation didn't save the Medici Bank, it just delayed the inevitable. Now here's the question that keeps financial historians awake at night, and it should keep you awake too. What happens when the Fed fails? Not if, when. Because the Medici pattern is mathematically inevitable. Every central institution that becomes indispensable eventually becomes unsustainable. The shock absorption depletes resources, the leverage increases, the interconnections multiply, until one shock exceeds the system's capacity to absorb it. The Medici absorbed shocks for 95 years before collapsing. The Fed has been absorbing shocks for 113 years. The timeline isn't exact, but the pattern is undeniable. When the Fed fails, here's what happens. Dollar loses reserve status overnight. Global trade denominated in dollars, $5 trillion per day, needs an alternative. There isn't one ready. Supply chains freeze, international payments stop, credit markets lock up worldwide. Your pension fund? Invested heavily in bonds and stocks that assume dollar stability. Your mortgage? Priced in dollars whose value suddenly becomes uncertain. Your savings account? Held in a banking system that depends entirely on Fed backstop guarantees. Everything you own financially is connected to the Fed, just like everything in medieval Florence was connected to the Medici Bank. But here's the critical difference, and this is why I brought you back to the Medici pattern in the first place. When the Medici Bank collapsed, merchants didn't disappear. They adapted. They created new systems, new institutions, new ways of moving and protecting wealth outside the failing system. The merchants who survived the Medici collapse weren't the ones with the most gold. They were the ones who saw the pattern coming, who diversified early, who built relationships and assets outside the Medici network before it failed. And right now, in 2026, the same choice exists, the same opportunity, the same window. The merchants of tomorrow aren't waiting for the Fed to fail. They're already building alternatives. Bitcoin, decentralized finance, gold holdings outside the banking system, real assets in multiple jurisdictions, skills that have value regardless of which currency survives. The Medici pattern isn't just history, it's a roadmap, a warning, and for those who understand it, an extraordinary opportunity. Giovanni de Medici didn't become the most powerful banker in Europe ignoring patterns. He became powerful by seeing them before everyone else,
by understanding how systems rise, how they concentrate power, and how they eventually break. You're living in the middle of the biggest version of that pattern in human history. The question isn't whether you'll be affected. Everyone will be. The question is, will you be like the merchants who were trapped inside the Medici system when it collapsed? Or will you be like the ones who saw the pattern, understood the warning, and positioned themselves to survive what comes next? The Medici built an empire on trust. They maintained it through reputation. They lost it through over-leverage and indispensability. And they disappeared from history in less than a decade. The Fed built an empire on the same foundations. They're maintaining it through the same mechanisms, and the same vulnerabilities exist today that existed in Florence 500 years ago. History doesn't repeat exactly, but the patterns repeat every single time. And this time, the pattern is visible to anyone who knows where to look. Now, you know where to look.